Hello everyone, welcome to the Ichimoku charts.com daily analysis for the US dollar index for Thursday, January the 21st, 2010. Well, quite a change of character for this market today. After three very strong bullish candles, we now have a spinning top type candle with a very small body and a fairly long shadow on the top and a smaller shadow on the bottom. The very small body tells us that the buyers have made much less net bullish progress than they have over the previous 3 days in this fairly volatile move when the market broke out above the top of the flag area. The large shadow on the top represents very strong downside price rejection, and obviously this came in when the market was trying to trade up to this previous resistance level at around 78.94. Resistance actually works within zones, not at exact levels, and this area around the 78.94 region was an area that the market held up at before and potentially offers resistance, and the market traded up to about 78.80, and then the sellers came in. So the buyers certainly lost a lot of commitment. Now, that doesn't look too well for the continuation of this trend in the first time frame uptrend that the market is in. And the market has a higher high and a higher low, so there is potential for a reversal here. We need to watch the low of the current candle for the market to potentially reverse for the first time frame with a potential lower high and lower low. And if that does happen, then there is potential for the market to find support at the 78 region, certainly at the Kijun Sen, the Tenkan Sen, which is at 77.70, and at the Kijun Sen, which is at 77, roughly about 77.50. Now, the market is trading up above the cloud of the Kumo and also trading up above the Tenkan Sen and Kijun Sen, which means that in all time frames the market remains positive and bullish. Quite often when markets build some solid momentum, as this market did in the first time frame, they need to have a rest, and there is potential for this market to reverse, but to find support around the 77.70 region where the Tenkan Sen is. Quite often when the Tenkan Sen points up very sharply, it reflects very strong upside momentum, and the market can find potential support around that level. If the market does trade off and enter a new first time frame downtrend, then if the market trades to that Tenkan Sen, then we do need to read the short-term dynamics and look at whether the bulls are starting to come into the market and may offer an opportunity to actually go long. There might be opportunity for the market to continue then with a new first time frame uptrend and in a second time frame uptrend towards this 78.94 region again. So the low of the current candle and the 78 region becomes very important, and then the 77 region. If the market does trade off, then anywhere through this previous congestion area, certainly down around this 76.80 region where there was previous support, they're all important areas for this market.